You know, it's funny, I was listening to the Bigger Pockets OG podcast this morning, and David Green was saying for the upteenth time, don't try to time the housing market. And he's right, except that he's not entirely right. It's real hard to time the housing market in terms of full market cycles. Knowing when we're at the top, or conversely, knowing when we're at the bottom, is basically impossible. However, it is possible to time the market on its annual cycle, because the housing market is on an annual cycle. In this market update, I'm showing you how to time the housing market and why the next 3 months are a time to buy. I'm Jon Schwartz, a house hacker, investor, and realtor in Los Angeles, California. In this video, we'll be looking at LA numbers, but the lessons we draw apply to every market in America. If you're contemplating a home purchase in Los Angeles, shoot me an email, john@househack.la, for a free strategy session on how to get the most out of our market. Onto my bi-weekly market update for November 9th, 2021. Each Sunday, I review the week's MLS activity for Los Angeles County. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the update, here's a quick explainer. Each graph covers the previous 12 weeks, the bars represent actual weekly numbers, and the line represents the 4-week trailing average. This smooths out the noise and helps us identify trends. Now, let's get into this week's data. Looking at single-family listing activity, we see an uptick this week in new listings, but overall, the 4-week trailing average of net new listings is down from 3 months ago. This is what happens in the fall and winter months. Fewer people put their homes on the market. Basic supply and demand economics would tell us then that prices must be climbing, right? Well, no. When we look at single-family sales indicators, we see that pricing is down from 3 months ago, from $764 to $757 per square foot in the 4-week trailing average. What's more, median days on market is up, and sale price to list price ratio is down. These are both indicators of a slowing market. So what gives? Less inventory, but better pricing, and a slowing market? Well, the answer is there's less demand. Fewer people list their homes in the winter for the same reasons that fewer people buy homes in the winter. Namely, Thanksgiving, Hanukkah, Christmas, Kwanzaa, Diwali, New Year's, and all the other winter holidays. November and December are generally regarded as months to visit with family, eat a little more lavishly, and put off any big plans until the new year. Which is exactly why this is the time to buy. For starters, there are fewer buyers, meaning less competition, meaning better pricing and easier bidding. But secondly, who in the world is going to list their home between Thanksgiving and Christmas? I mean, why would anybody list their home between Thanksgiving and Christmas? Unless they had to. So look, here's been my experience. In November and December, we see less inventory, and we see some funkier inventory, but we also have the opportunity to find the best deals of the year. If you're thinking about jumping into the housing market just as soon as the holidays are over, I urge you to start your search today so that you can close before the market heats back up and pricing with it come February. In condos, we have almost the same story. Net new listings are down from 3 months ago, but pricing is still up. However, median days on market is up and sale price to list price ratio is down, so we should see pricing drop over the next month. Looking at residential multifamily listings, and remember we're talking about 2 to 4 unit properties here, I'll remind you again that multis aren't as cyclical as single family homes and condos. Net new listings are down, but sales indicators are a mixed bag, with pricing slightly down, median days on market almost even, and sale price to list price ratio almost even. And lastly, looking at LA County vacancies as reported on apartments.com, we can really see that pandemic-driven vacancy has come to an end. After dropping precipitously all year, the number of vacant units in LA County has been hovering around 32,500 for the last month solid. It looks like we've reached the bottom, and we'll now probably just see the usual ebb and flow between the lease-up high season in the spring and the low season in the winter. If you're interested in a smarter way to buy a home in Los Angeles, check out this video or email me at john@househack.la for a free strategy session. See you next week.